The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks, and a Happy New Year to everyone. We had a new moon yesterday, and I put the first chart into Tiger TV today of the weekly silver chart. I know most of you are aware that gold and silver have started to move substantially higher, but I wanted to, we'll start out with gold and silver today on the commodity show, but this is going to relate to something, in the stock market in just a minute. If you'll remember, when we were making our highs way back in 2011, in March of that year, silver was going straight up. It had gone from 27 to 49 in about 13 weeks without any correction at all. And what had happened near the top, we had been alerting the folks here at TFNN the fact that the open interest had been dropping. And when open interest drops and prices go up, that's short covering, folks. That means that people are buying their positions back and there's no new buyers coming into the market. Well, upon checking what happened to the S&P 500 and all the equity indexes, on Friday they had a 5% drop in open interest. So what you saw on Friday and a few days before that has been short covering in the equity indexes. That's not a good sign. I know we've gapped down today. I don't know whether it's due to the new moon phenomenon that we've seen happen quite a bit. We also have the biggest Bradley date of the year happened yesterday. Whether that has anything to do with it or not, we still have the record margin debt that keeps increasing all the time, but those things don't count anymore because things are different this time. So we'll see what this first correction is going to be in the stock market. Going back to the gold and the silver, I don't know if you folks were watching the market on the New Year's Eve on the 31st, but we had gold down about $24. It was trading down around $19.82. The price that we were looking at for the trigger price for the long was at $11.75. It missed it by about $7, and then it just shot up, and it's continuing, to go higher today, being up around $18 to $20. The same thing has happened in silver. It has also moved good. Now the difference between what's happening now and what happened in March of 2011 is we have not had a big increase in open interest here in this move. So it's too early to tell. I'll be checking the open interest figures every day at the CME just to see if we have new buying coming in or if we have people leaving the market. That's going to have a pretty good idea of where the move will go. But we've had a pretty strong rally of over $55 in the gold in just a matter of a few days. So that's the first sign that things have been going up. But frankly, we've had this move in the market with the gold stocks, and I'll put up American Barrick next because it's acting very good. It gapped up again today, and it's looking, as fact is, it's almost at the 61% retracement of the previous move that we made, way back in late summer. So that's going to be really interesting if the gold stocks keep going up. With American Barrick gapping up today, that's telling us that the low that we thought was coming in the market for the gold and silver, it looks like it has in fact done that. Now we're going to take a look here at the gold market here just on a daily basis, because it's important to realize that we were very, very close to this level that we were wanting to buy it at, And I wanted to bring that to your attention, because this is going to give you lots of chances to buy, folks. I believe that it will anyway. It's had a few pullbacks already. Last night it dropped $11, and then turned around and went. And you can see what happened. But we're trading at 1224 in the gold right now. We're up, like we said, $55 from the bottom. We've taken out last week's lows, and what we want to be watching now is for a nice little ABCD pattern on the 30-minute or on the hourly basis. The good part about this is that I'm on the air every Monday, Wednesday, and Thursday, so I'll be able to at least keep an eye on when we see one of these corrections coming. But there's a really strong possibility that we could have a very good rally here in gold. The last time we had these rallies in gold, the one we had back in June, we rallied all the way from 1180 all the way up to 1430. We rallied $250 an ounce, which was $25,000. And then the one in October, we rallied $110 an ounce, which is $11,000. So these rallies can be quite profitable. So you want to be able to take a look at it. We've had a request from one of our listeners to take a look at wheat, and boy, if you want to see a market that looks sick, this is the one. It keeps going into new low ground. We thought we were going to have a little bit of a bounce just a few days ago. It bounced about 6 or 7 cents, and then wheat has continued to drop substantially. And we are, really looking at a market that really wants to go a lot lower. It's already exceeded the ABCD level, and it's also exceeded the 1.618 level. So that tells us that wheat is most probably, heading lower. We're seeing this in a lot of commodities today, folks. You've got crude oil down $2 a barrel. It hit that, par level of $100 a barrel. Looked like it was breaking out, and then the breakout just gave up. And once it went below the lows of the previous 3 days, you certainly didn't have a chance to, get in to think that it was going to go higher, because once it does that, it tells you that more selling is coming in. Because when a breakout occurs, it usually continues right away, and if it doesn't, that's your first sign of that something is not kosher in the setup. We've had a request now for someone about the EMM, which is the emerging market index, and if you'll give me a second, I have to place that in because I'm on my laptop because of the holidays, and it will only take me a second, except that I did it wrong. Oh dear, it's tough being an Italian in a holiday. There's no question about that. Okay, we're going to be in business here in just a second. Just as long as I get the daily. And this chart does not look good. I mean, I already know what the chart. Oh dear. And hopefully we'll get the data coming in here, and we'll see if it's. I have to show you something that happened that I have never seen before in the markets, and I thought that I had seen everything, and that is what happened Friday. I'm not getting the, I got the wrong symbol. Doggone it, there's another. Okay, folks, give me a second here, and I'll change it, and then we will move on to the next one, and we will get it. I've got to be careful here, otherwise I'm going to mess everything up. EEM, I hope that's it. Give me a second, and then we'll see if this is it. Otherwise, I'm going to have to move on. Yeah, there we go. I think we're okay now with the emerging market. Just give me a second, and I will get this fixed up here with any luck at all. It's not giving me. Just a second. Well, this emerging market, I can't get, for some reason it's not giving me, it's not refreshing my data, probably because I don't look at it that often and I don't really have it, but it's trading at 40.39. This market's been bad all along. I've been saying this, if you look at all the stock markets of the world, especially Asia and the emerging markets, they've been going down. They've had lower tops for so long, it's hard to even, to fathom that they've had a chance to rally. Even with the rest of the markets of the world, these were the markets that were supposed to bail us out, and they certainly didn't. It was the Fed that bailed us out, and nothing more. But the emerging market index, unfortunately, I'm not able to get it up, but it's headed down. I don't think there's any question that it looks lower. We've had a pretty steep drop today, but that's in context with what we're seeing with everything else. But we're getting hit all across the board with the commodities, folks. There's we got corn down, wheat down. I mean, all of them are down. Crude oil's down heavily. The only ones that are up are the gold and the silver, and those were the bottoms that were coming in that we're looking at. So far, that's what we want to be seeing. But we'll take a look at crude oil here, and you can see what happened here. With crude oil, we had a really nice move. It went up to the 1.27 expansion of the previous high. And that was at that par level, just a little above par that we had talked about. And in just a matter of 3 days, we've dropped 4.5%. And when you see a long-ranging bar like this after a rally that took place for 2 weeks, that usually means that you've got more coming to the downside. And the first correction level that you'd be looking at in crude oil would be down around the 95 level. So that's still another $1.30 per barrel on the downside, as near as I can tell. If you folks have any questions, it's let me get this right, 877-927-6648 if you have any question. Regarding wheat, once it went below the $6 level per bushel, that broke a great deal of support at the 1.618 level. Corn is very close to breaking down below the $4.17 per bushel level, and that sets up prices, around $3.50 per bushel. So we've got some deflationary things, still in the air. Nothing much has changed all through this. I mean, we all know the Fed has been pumping money in, and now they've told us they're going to taper it off, and the market took off. Now I've got to talk to you about something technical here, folks. We've got to take a little bit of a break here, and the euro's under a great deal of pressure too. But I want to talk about what happened Friday, because I had not seen anything like this in all my years of trading. I mean, I've seen some mistakes. But what happened in the stock market, I'll just get it up here. Hope we can. If I can't finish it, I'm going to do it on the break because it's that important. I'm going to put the E-mini S&P up on the 15-minute chart so you can see what happened Friday, and you'll take a look at it here. Most of you weren't paying attention because it was New Year's Eve, and if you'll notice, there was a big move from 1837 to all the way up to 1847. Folks, that did not happen. That data is not what's going on. We got the Dow down over 100, the S&P down 12. We'll be back in just a minute. We'll talk about this situation a little bit in more detail.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, we're back, and a good way to start the year is to talk to one of the best traders that I know, and that's Mr. Z in Philly.
Larry, Happy New Year to you, sir.
Happy New Year, and congratulations for your win against the Dallas Cowboys. That's I know it's a big thing in Philadelphia, so congratulations.
Well, thank you very much. The people around here are certainly happy.
That's for sure. What can I do for you, my friend?
Larry, since this is the commodity show, free commodities, I have observations wanted to see what your thoughts are. It's copper on the short side, beans on the short side, cocoa on the short side. Copper to starts, daily charts. We made a high this morning, 342. Is this an ABC up that's done, prepared to turn down, do you think?
Well, I think so. John, if you'll give me a second here, I will update this. I haven't looked at copper in a while. I'll have to pass on the cocoa, my friend, because I don't trade the softs very often. That's like saying Santa Claus comes every decade. I don't trade the softs too much. But we've been up here for 5 days in the copper. And it's really, it had a little perked its head up above the last week's highs and then is reversed. So I agree with you. All we did was touch those August highs up around that 338 level, and I believe we're most probably heading down. We had that beautiful Gartley that you had pointed out down at 315 per pound, and we got a nice 23 cent run out of that. So now that should be at least a pretty good correction down to the 325 level is what I'm looking at in the copper.
Larry, the thing that I'll have to share on copper, I'm looking at the daily chart you just posted. Last week, the Christmas week activity was very suspicious. Let me think, I'm thinking the dates. It was Tuesday the 24th. Light trade, very light trade, and every market was closing midday for a half session only. At 11:45 in the morning on Tuesday the 24th, like 30 minutes before copper's going to close on Globex, copper is trading at $3.31. Nothing, absolutely no activity. At 11:45, a massive order came in, driving the copper futures in 5 minutes from 331 up to 344, and then it's just gone sideways since. That smells to me of an operator playing games, painting the tape, luring unsuspecting speculators in. I'm thinking this thing. It looks like it's an ABC up completed, and but combined with the suspicious action last week, leads me to think maybe there's a crush coming dead ahead. And when I see what's going on with heating oil, gasoline, oil, I'm thinking this kind of all smells very fishy.
I agree with you, John, and I'm sure you're aware that there are four people that control 80% of all the copper speculation in the world. There's one in Europe and three in South America. The one in Europe is basically a consortium that's Chinese traders and stuff, but they really do most of the business. So when you see a market run like that, that's most probably what is happening, is that they're just in their buying, and when the market is thin like that, it doesn't take very much to do it. A perfect example is what I was talking about right before we came on the break, was the fact that what happened in the S&P and the NASDAQ and the Dow Jones. The Dow Jones moved 100 points in the last 15 minutes, but that doesn't show anywhere. It wasn't showing on any equity runs. I had orders, to sell in there because of the new moon. They were not filled, and so those were bogus prices. And when they posted prices, on the end of the day, for settlement prices, you could see that they were totally off from what was showing on the chart. So there's something wrong, and that's really bad data. They should correct it, but unfortunately no one's done that, and not many people are looking at it, so it just goes by the wayside. So I agree with you. There are some games being played here, and you got to be careful of it, and that's why you got to use stops, because when you're in a house full of crazies, you just don't know who's gonna take care of the medication. You know what I mean?
Indeed. Larry, I'd also just wanted to share with you something that I think is very actionable and a high probability idea, and that is a continuing bear market in soybeans. I will share this with you. John,
we got to take a break, pal. Will you stay with us, please? We'll be gone.
Hey, I will, certainly.
Stay on, because we'll look at soybeans in just a minute.
2014 has arrived, and Tom O'Brien has put together a special webinar for subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the three most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these three sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of the special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, with our friend John in Philadelphia, talking about some of the shenanigans that we're seeing in some of these markets. Are you still there, John?
I am, Larry.
And you were talking to us about soybeans.
Larry, I wanted to share an observation on beans. Soybeans made a low in November, right around the time of the USDA report, at about $12.50. That was a spot contract at that time, and then we bounced strongly. It would be a very classic type of post-harvest bounce in the soybean market. What I will tell you is I've been trading the beans exclusively from the short side the past 4 weeks, and I will share this. If 1250 breaks, I want to just put out on the table my eyeing soybeans down to $11, and that would be driven, should that occur, by an excellent crop down in Brazil and Argentina. And I'm always reminded of the idea Ed Young coined and shared with many of us in the den over the years regarding commodities, namely, the best cure for high prices is high prices. And we've seen that, of course, we've seen that manifest in corn and wheat, both of those markets down dramatically. And beans have been falling, but less so. But the weather is emerging to turn out to be excellent. And we may be faced with bumper crops coming out of Brazil and Argentina. and that could be the catalyst for beans to get sold off hard into the February, March, April timeframe. So I just wanted to share that and see what you saw on the charts as far as trade opportunities are concerned.
Sure. Well, a few weeks ago we were talking about the head and shoulders pattern that was there in the soybeans, in the March soybeans, because we had a shoulder at 13.34 a bushel, and then we had another shoulder at 13.34 a bushel, and the high came in at 13.77. And when you mentioned the 12.50 level, I think you're spot on there, because if it breaks 12.50, that head and shoulders objective, the way you figure that out is you take the distance between the head and the shoulders, and you take the vertical distance down. That would take you to a little below $11, right around 10.90 a bushel. And that could very easily happen. You know, if you can go from 13.77 to 12.77, you know, it's very easy for the market to go down to that level. So I think you're spot on. And John, no one has been any better at corn than you this past 2 years. You've said all along, you know, where it was going to go, and it certainly went there. And it looks like now, I got your email over the weekend. It looks like now that 350 per bushel is not too far away if we get much below, you know, 410.
Indeed. That it looks like a situation where in 2010, 11, and 12, largely on account of weather disruptions, we were short of grains and prices were high, and we're strongly trending into an environment where the world seems to be awash in grains as basically weather improved and farmers have responded to high prices by, you know, planting fence post to fence post sort of deal.
Indeed, they certainly have been doing that for sure, and if we get if we start getting, you know, further weakness in other commodities, it's going to put a lot of pressure, you know, on deflation. So it's going to be very, very interesting what happens over these next few weeks for sure.
Say, can I lastly just ask you to share whatever opinion you might have on crude oil, both NYMEX West Texas and Brent? I'm just thoroughly confused where these are going, if they're going anywhere at all.
Well, I'll put the crude oil chart in here. I put it in here once before, but we'll look at it again because it's such an important part of the commodity index. You know, we went up to that $100 per barrel level, which looked like it was going to make a ABCD up to 103, and then the very next day after it hit 100.50, you know, it reversed the previous day's action, and then it started to go down, and then today it's had the big move down where we're down more than 2% in crude oil, and that tells us that, you know, if we get much below $93 per barrel in the crude, we'll be looking at somewhere in the mid-80s, $85 to $83 per barrel, and we've been there before. And frankly, you know, the gasoline, if you look at gasoline across the country, when I watch the news and stuff, I always watch to see, you know, what the gasoline prices are as the newsmen, you know, drive by these places. And, you know, in Arizona, we're under $3 a gallon in many places. So even with the holiday traffic and the cold weather, you know, nothing precipitated a big rally. And so this is a sign that these things look like they want to go lower.
I appreciate your view. Hey, thanks so much for the conversation, Larry.
Hey, you keep calling in, John. We appreciate everything you do, buddy. I watch your posts, and you flat know what you're doing, my friend. You're one of the chosen ones, in my opinion. And believe me, I've seen a lot of people over the years. So keep up the good work, okay?
Good to speak to you, Larry. Thank you.
You bet. Okay. All right, folks. We've talked about the gold. We've talked about the silver. We've had a question about the VIX index. And I wanted to bring that up because it's been interesting, because as the market was going down, you know, big time last week, the VIX index was making a beautiful cycle bottom there. Went down to that 11, just a tad under the $11, under the $12 per share level, and now we've rallied up a little bit into the area of 14.28. So we've had a good, you know, 15% rally in that in just a matter of a few days. But there's still no fear in the market. everybody is complacent. The Dow Jones is at 16,000 and change. Many people, including this person, didn't think it would ever get there, but in fact it did. The way that the Dow got there, in fact, is we ought to take a look at this Dow Jones, because we are in the midst of the major spot in the Bradley model for the whole rest of the year. It's the biggest spot anyway, and we had the new moon come in on the 1st of January. And so what was interesting about this Dow Jones chart is the last 10 days of that run, it left two gaps. And that was very, very unusual to see a gap in the Dow Jones, especially the one that happened on the 26th of December. Now we've reversed all of that. We've reversed both of those. For some reason, there we go. I think we'll be able to get this model up so that we can see what it does for the next few months and stuff, because it has a great deal of bearishness now all the way through the next 5 or 6 months before we get some type of relief. And whether it's going to work or not this way or not, I'm having a lot of trouble today, folks. Just bear with me a second. Maybe this will pull it up and we'll take a look at it. And no, it's not working the way I wanted it to, so we'll just leave it as we say. Anyway, we've had a big move down today of 100 and some points, which really doesn't mean very much because the market was so overbought. It's bound to have a correction. The last correction we had, occurred in the October period, and we went from 16,100 down to 15,700. So we dropped 400 points. Well, we've already started off a little bit stronger than that on the way starting off today anyway. So whether that means very much or not, I'm not absolutely sure. I've got a request here. I know this is the commodity hour, but I've got a request here for someone asking about Twitter, because we talked about this on one of the shows just recently because of the fact of the hanging man pattern that happened in Twitter, and we wanted to in fact, Twitter is actually up today with the rest of the market down, which is tells us a little bit sign of strength. But as you can see, after I get this posted in here, we did have this pattern complete. It's called the hanging man pattern. I've circled it so you can take a look at it, and now we're making a 61% retracement back in Twitter. So you might want to be, if you're a real aggressive trader, is to take a look at Twitter, on the short side up here around the 67 level is what I would be watching. The thing that folks, this is the commodity hour, so we try to focus on that. We spent a great deal of time over these past 4 or 5 weeks looking at the gold market and getting prepared for that move that we've seen in gold. And if you're not in it yet, you really want to be able to try to prepare yourself to get in the gold market, because it's had 2 good days now. We had a big reversal day on Friday. We came within just a few pennies of the exact low that we were trying to find in the gold market, down around that 1175, and we got down to 1182, and then the market reversed in a matter of minutes. And so we will be watching really closely for a pretty good rally here. Now, if we do go below the 1170 level, then that's going to be a very negative sign. But so far, it is held, and we want to be looked to be a potential buyer. The reason why, folks, is this is the first time in 3 years that the gold and silver stocks, particularly American Barrick and Newmont, have actually shown signs of really good strength. They're gapping up, and even when the market is down, the gold stocks don't go down very much. So they've been beaten up for 3 years, so they're due for a rally, even in a bear market, and they're still bearish. Even in a bear market, they can have considerable rallies. So keep that in mind, when you're looking at these things. Silver is a little more difficult to to follow because it has periods where it has really tight illiquidity, and you don't want to be able to stand in front of it. Gold trades beautifully. There's nothing wrong with the gold market at all. What we're watching now is the fact to see if we have any increases in open interest in the gold or the silver, which tells us that we have more buyers coming in, and that's what we really need. We've got the exact opposite occurring in the equity index options. The open interest in those dropped 5% in just a matter of one day. That was Friday. Folks, I would really recommend, if you're going to be in the commodity markets, is to go to www.CME. That's the Chicago Mercantile Exchange. They provide all the market data to the point correctly every evening, and you can go in and check the open interest figures yourself. You can see, which of the options and which of the strike prices on the options, and also which of the futures months are the most heavily traded and where the open interest is, because that's the one you want to be trading, because that's where you have the volatility. We strongly believe, the work of Dr. Andrew Lowe, that these markets do have a certain memory, and they do repeat over and over again, and with this repetition we have pattern recognition, and that's what we're trying to look for. So if you'll spend some time, like Jim Twentyman says, defy human nature, do the work yourself, is to go into the CME in the evening and look at the things that you're trading. You don't have to look at everything, but if you're looking at gold or silver, see what happened to the volume and open interest that day. Sometimes that can be a real key. I watch volume and open interest when it reaches record levels, because that's where the changing of hands occurs, and I think that's the thing that really is really good. I happened to be watching over the weekend on the holiday, because there was not much of a football fan, but wow, I couldn't believe that game between Texas A&M and I can't even remember. Duke. My goodness, they scored 100 points. I was so shocked, and it was one of the most exciting games. And then I watched the Stanford-Michigan State game with Mark Douglas yesterday, because he's a big Michigan State fan. But boy, they've had some exciting football games, and even though I'm not much of a fan, it was still quite exciting. Anyway, what's interesting in these markets is that we're starting to see some increased volatility. I've said all along I think 2014 is going to be the year of volatility. These markets are not going to go straight up like we've had for since October, and there will be big moves both up and down, and we'll have some fun looking at it. But we're looking at this Big Bradley data in here with the new moon. And the way that it's starting, with the market down over 100 points, that's the way markets start. Just like the gold started on the upside, that's what you'd be looking for to have happen with the, on the downside. It surprises a lot of people. And it takes, no one is going to be even concerned about this sell-off in the Dow Jones Industrial Average until we take out 15,700. That low that we made way back in December, when the Federal Reserve came out with their latest prognostication of what was going to happen. And remember, this is a giant experiment that they're doing with this QE1, QE2, and QE3. If it wasn't an experiment, they'd do it. We got the Dow down over 100, the S&P down 12, and gold up 20. 877-927-6648.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, folks, we're back, and I posted in the chart of the euro showing how it went up to that 138 level, which was the 618 retracement on the long-term dailies and weeklies. So that's very important. You know, the dollar has held its level here with 79, which was very, very important. The same thing with the Swiss franc. You know, we've been looking at the Swiss franc from the long side down at that 88.50 level. That's moved, you know, a little better than $1,500, which is a good sign, starting in the right direction. But I'm going to do a last chart that I'm going to post in here. I think is the most important. This is the weekly chart of the New York Stock Exchange Index, going back to 2007. We made a new high, folks, above 2007 on Friday, right near the close. The old high that we had in 2007 was 10,387, and the high that we made on Friday was 10,406. It made a high of 22 points on an index that is trading at 10,000. That is pretty much insignificant. That completes a double top from 2007 It completes an ABCD at 2009 to 2013. It completes a butterfly from 2011 to 2013. It completes the final butterfly that we've made so far this year for the whole year, the butterfly at 2013. And then there's also, we've had a 3-drive pattern between August and November, and we've also had a 3-drive pattern from May to November. But remember, it's different this time. All I can tell you, folks, is just be careful. That's my motto for the year. I'm not going to do a trade of the year this year, but if I were to do one, this would be the trade of the decade. So that's what I'm looking at for the situation that we're watching here with the stock market, and we can rally back and test the highs again without any too much trouble. But the market has started down right after the new moon and at the Key Bradley date, so we got to respect that and see what happens. Keep our eye on gold. If we should get a move back in gold to around the $1,200 per ounce level, I think that would be a pretty good place to nibble at it, from the long side. And so that's what I would be, keeping an eye on if you're going to be, watching, something to buy from the gold market. The gold stocks still look really good. I don't see any problem with them, and we're thinking that they've got a long way to go, from the upside. So we have a question from one of the folks in the Tiger Den, and that is about this action that happened in the stock market on Friday. I can't explain it. Nobody else can explain it, but the market jumped up. These trades were not registered as near as I can tell. I double-checked it. The settlement was 7 points under where the market was supposedly closing on the chart basis, which was, I've never seen that happen before. And it did it on every service, and it did it on the settlement for the CME. So those prices just didn't happen. How it occurred, I don't know. I don't know if it's hacking or what it was, but it happened in the Dow Jones, it happened in the NASDAQ, and it happened in the S&P. But in fact, these were not reported trades, as we can tell. And that's something we have to keep in mind, because as we know, there's a lot of insidious things that happens on the internet, and so we got to keep in mind that we have some challenges ahead of us to watch this kind of stuff. We have to be very wary of cyber terrorism. Live every day in an attitude of gratitude, and may God bless.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.